So ahoy there, traders. Welcome one, welcome all. Thank you for spending just a moment out of your day to spend it with little old me. As always, it's appreciated. Hello, Glenn. Thanks for your kind words. We've got a nice group of regulars, one or two new people, I see. I'm just going to skip down the list. We've got hello, Brian, Colin, or always, Greg, Emily, Glenn. We've got Jeff, Michael, Nick. We've got iPhone user one. Just like I'm not sure if it's the same iPhone user as last week, but nonetheless, hello, Stephen, Scott's Vito. And again, if I'm not mentioning your name, nothing personal. I'm just skipping down the name, grabbing a few names, a few regulars, a few new people. So hello one, hello all. So we've got a fun packed session. We're going to get straight into the education side of it, like we did last week, following on from last week, where we looked at finding stocks to day trade. We're going to look at footprints to find stocks to swing trade. And as with all things, it starts with the end in mind. So that's what we're going to look at in just a moment. For those who are new and this is your first time though, the usual format goes something like this. We're going to spend about 20 to 30 minutes at least, and up to about 60 minutes today. And we're going to jump straight into the finding explosive stocks, which will then look at a few slides of what we're looking for, and then we'll go and look at them, put it into practice and see if we can find some trades to trade. We'll also review some of the trades that we've had. We've got lots of student successes to share from my over-the-shoulder training sessions this week and last week. So we'll have a little look at some of the trades that we've placed using the scan that we looked at in last week's day trading. So that's the kind of the focus of a lot of the trades I'm doing at the moment. But if you are new and this is the first time that you're tuning in, or you've not heard my weird voice and accent before, I'm not a Wall Street guru. I'm just a regular guy who figured it out. I did it the hard way. I did it the trial and error way. You know, like most people, I've made all the mistakes that you can, but somewhere amongst it all, I learned fast and cut the losses small and rode the profits. So it became profitable for me very quickly. I will go you with the sub-story version of that story some other time, but nonetheless, the way that I like to trade, I like to consider what I do as a production line, which makes it simple to replicate. And you'll see that in a moment with one of the scans that we like to do. I'm what most people typically call a lifestyle trader. I like to have a life around trading. I don't trade around my life. It's a simple distinction, but I think it's an important distinction. Most of the time I get to choose what I want to do, when I want to do it, with whomever I want to do it. Usually my day involves taking a nice slow pace. I try and minimize stress in everything that I do. The primary reason is I've got Crohn's disease. I have periods of times where I'm not well. It also maybe explains to some of you who've got to know me over the weeks, months, and years is that there's times where I'm not well. So I want a production line for my own trading to make it simple, because if I'm not well, I just want to be able to go step one, step two, step three, put the trade on, and then go and relax and rest. So it's for me first, but it turns out that it's very beneficial for people who have maybe a different lifestyle. Maybe you've got a little bit of a busier schedule. You've got other things. You've got family. You've got work commitments, and it does mean that you can do this around your other commitments. So my name's Phil Newton. I've been trading full time since 2001. I've been hand drawing charts since the 90s. Calling most of my trades out in real time since 2004, managed private client accounts with assets under management of around 10 million. I specialized in Forex for 12 years. I was told he's a day trader, as I jokingly say. It was a really bad movie. And I've recently come back to it, if I'm going to be honest. The last 5-6 months, I've come back to day trading, come back to my roots. But I do like to swing trade stocks and stock options, and have done that and specialized in those two vehicles for about the last 10, 12 years. Mentored and coached thousands of students. I've mentored and coached quite a few current mentors. I'm on about 3 generations of people who have mentored. You might know some of the people who I've actually mentored over the years, and they're now mentoring other people. They're in some ways, bigger headline names. So it's just a kind of funny little twist on the way things roll. One thing that is consistent, I am obsessed with helping you find your success. That I really truly get a thrill off helping you figure out how this trading thing works. And that's in part what we're going to look at today. We're going to look at how do we find something to trade. As we said earlier, I'm going to jump straight into it. But before we do, let's look at some of the trades. Let's review the trade from last week. We've got a big haul of trades, mainly student successes. Again, we've got some nice Zoom trades. This is, again, a quick day trade, if you like. It was a 61% return on capital. And these are all trades that we've found using the profits at the open strategy. We've got a very clear example of one of the strategies that we're looking for here. This is a 5-minute chart on Square from earlier in the week. And again, it's just a very clear example of last week's scan, that the profit from explosive day trading stocks. Again, if there was something that was going to be in a textbook, this is going to be straight out the textbook. And if we just look for this type of pattern, again, we've explained it in the past, then we can, really see successes from short-term trading. And we're going to look at something very similar on the daily charts for swing trading. So just because we're trading a 5-minute chart here doesn't mean the same things are not relevant to a daily chart. I've proven it many times over the years. It's the same strategy. We just might approach things in a slightly different way because we've got a different time horizon. In this case, it's 5-minute charts. Again, we're going to see what the daily chart setups. And as we keep saying, they don't always work out. There are losers. Student successes, we've had a great Twitter on. Been very vocal about Twitter. I was going to be bullish above $50. This is actually a swing trade based off the back of a little bit of news. And we're actually going to dissect Twitter as our footprints for what we're looking for. So we're going to dig deep on this particular, not just the result, but like, how do we find more trades like this? One of our students, several of my students actually, all got in earlier than me. I was going to be long above $50. Several students got in at 47. One of them got in at 46, right at the low here. And the student certainly beating the master on this one. Again, more Zoom trades. Another example of our afternoon trades, lazy Neo trade. Again, we've got all the reporting there. Just want to, give some credit to my students. They're putting the trade on, which is awesome, which is more than most people do when they talk about wanting to learn how to trade. So this is what we're going to show you. This hopefully just demonstrates it. It's not just me saying it can be done and that it is possible. It's like, here's the results of students. They're all doing it. So if you want to replicate it, then, sit back, pay attention. You don't need to take notes. It's going to be recorded. It is being recorded. So you'll be able to catch up with this if you want to sit down and digest it at a slightly slower pace and press pause and all the other good stuff. You'll be able to do that as soon as it's ready to watch. Anyway, let's think about finding swing trading stocks. As I said earlier, I like to refer to what I do as a production line, and it is intentional. Lots of reasons. I've mentioned one or two of them, my own personal reasons. But I want to be able to have step 1, step 2, step 3, put the trade on. And if I'm not well, as I mentioned earlier, I want to then step away from the computer. That's the 5th step away. I don't want to spend hours flicking through chart after chart after chart. It's pointless. I spent 12 years doing it. I'm not saying I haven't done it, but I did spend 12 years sitting in front of the computer for 10, 12 hours a day. And you're just going to make yourself ill. If you've got the time to do it, it's just not healthy doing it. So the production line that I want is the first thing, step 1, find a mechanical reason to look at a chart. Again, looking at 50, 80, 100 charts every day, there's a time and a place to do it. But most of the time, it's not worth it. So we're going to focus on this step 1, find a replicatable reason to look at a chart for an opportunity. We're going to call that a scan, but it's a mechanical reason. It's replicatable. At the end of our session today, you will be able to replicate it. It's going to be nice and simple. Typically, the next steps are we want visual confirmation. We'll look at this step as well, because that's the second part to the scan process. Is the mechanical step showing us what we're actually visually expecting to see? So we just want visual confirmation. We're expecting one thing on the mechanical step, visually confirm it. It sounds really obvious when you say this, but so many people don't do these things. They either do one, they do the other, but doing both in conjunction with each other, that's really where some of the magic of a process, a system, a method, production line process, that's some of the magic of it. And it's only then that we think about, the entry possibility. For me personally, I'm very open about it. I trade the next pullback. I can trade the last pullback. I'm trading some version of a pullback. We have 9 different entry patterns that I like. I've got 2 favorites. We're going to look at one of them later today. But steps 1, 2, and 3, mechanical, visual confirmation, find your entry points. And then we're going to manage the trade. TTE is how I refer to it. The timeout, target out, exit out. We've covered that in the past, so we're not going to focus on it today. And as we've alluded to, we're going to focus our attention today on the mechanical scan. We're going to start off with slides, as I mentioned, and then we're going to go into the chart and show you practically how to do it. So mechanical scan. Mechanical scan. Looking at the bear charts doesn't make sense, but there are clues and footprints to help us figure out what may happen next. And not only that, it will help us figure out, is there further opportunity tomorrow or day after or the day after that? And as I said earlier, this is Twitter. We're going to dissect this a little bit to try and look for a footprint. So just to orientate ourselves, there is a 200 period moving average here. There's a 50 period moving average. And the dotted one that you might just be able to barely see is the 20 period. Now, the average prices, they're just that. It's a tool. One of my personal gripes is that a lot of people don't understand the tools that they're using. All an average price is an average of, in this case, the closing price of the last 200 closing prices. It adds it up, plots the points, and then tomorrow it's going to look back at the last 200 bars, adds it up, plot the next point, then look back. It's kind of stepping forward. I appreciate that's pretty simplistic. It's basic. It should be. But it's not a signal generator. It's not a buy signal. It's not a sell signal. It's just a reference point. That's all I'm using these tools for, reference points. It's going to help me dissect the chart. How does price interact around the tool? And we've looked at other tools in the past. We've looked at trend lines. We've looked at Fibonacci. We've looked at Dow 3, GAN 3, Elliott Wave theory. We've looked at, we took a deep dive on percentage R. This time, we're just looking at moving averages. As far as I'm concerned, the tool doesn't matter. Let me say that again. The tool that we're using, it's not magical. It's not self-fulfilling. There's no prophecy involved. I'm just looking at how price is interacting with the tool. And all I'm really trying to get to before we go any further is the tool doesn't matter. Pick your favorites. If you want to use MACD, use MACD. If you want to use stochastics, but just look at how price interacts with the tool that you're using. And then you can start to kind of replicate what I'm going to go through right now. And if you want to use the moving averages, that's cool. That's fine. I do teach this. In this is what we're going to go through, or what we're looking at is pretty much the phases of the trend. So what I'm looking at and what I'm looking for is I want to see a stock go from a resting or retracement phase and offer up a potential for an explosive trending phase. So what we've done here, again, let's think about the footprints. This is a Twitter daily chart. I've just zoomed in a bit more. The vertical line here is where I've marked off the average price. The 50 period has crossed over the 200 period. And at that point, we can say that the short-term trend is trending up higher than the long-term trend. The 200 period is the long-term and the 50 period is the short-term. So that's what I'm looking at here. Everything is going to be measured from that point. So when we've got here, we're up 28%. We're up 28% from the cross is what I've measured there. And then the other thing in the boxes here, I'm looking at the retracements. So what we can spot is a footprint. So what I'm looking for with these retracements, I'm looking for at least a 10% down move. And that's what these 3 points are on this chart in the last, since July 2020, there have been 1, 2, 3 down moves of greater than 10%. Why 10%? It's a big retracement. It's an extreme of movement. It doesn't normally happen, but a 10% move in a 10-day period, that's a fast move. That could be an anomaly. It's an extreme, and we can use that as a potential buying opportunity. And many people do. Investors, swing traders, momentum traders, they're looking to buy the dip. And all we've done here is we've defined what we might consider a dip worth buying. So let me just pause there briefly. Does that make sense? All we're trying to do is, instead of try and buy every red candle, because again, in past sessions, we've looked at trends. We want to buy the dip. Instead of buy above every red retracements, 2 or 3 red bars, we're just saying, okay, the retracements, the dip, the buying opportunity needs to be deep enough in a short space of time. That's going to give me that buying opportunity. That's all we're doing. We're defining what we're going to consider the dip. So the dip, the retracement needs to be 10% in 10 days minimum. So that's all we're doing here. So all I'm trying to do is avoid the noise. I'm not going to trade the 1% moves, the 2, 3. It's at least 10% is all I'm getting to. So this is our footprint so far. So we need to see the average prices crossed higher. We need to see, again, in the stock world, we need to see price moving or trending. And then we can start looking at time. In this 2-month period, in that 2-month period, it's been up a certain percentage. So we've get these footprints and we're looking to try and, is the stock that we're evaluating matching what Twitter's done? Because we're going to use Twitter as our footprints of, okay, this is what a good stock worth trading looks like. Great. This is my out the textbook example. So how can I find stocks that are at that part of the chart or that part of the chart or that part of the chart so that I can trade that part, and that part? So that's what we're looking for. That's why we're doing this. So we've not yet got to the scan. We're looking at what's the end results. What am I looking for? Because if there's no point scanning for anything if you don't know what we're looking for. That's what we're doing right now. So we've got the start of our footprint. We've got the start of an observation. We've got some good retracement moves. So I want to see the average prices crossed. I want to see sufficient time gone by. So I'm not taking the immediate cross, because the downside with using moving averages is they're lagging. All indicators are lagging. But it might be that it gives us a false start, a false indication. So we're going to wait for a period of time to have gone by. Let's just say 2 months. It's about 40 days. It's about 40 days. And the stock also has to be rallying in that time period. And then we're going to look for a 10% move down in 10 days. Let me pause there. Is this clear? Give me a little comment in the chat box. If you're watching the recording, pop a comment below the video. But just let me know we're all on the same page. And if you've got any questions at this point, let me know. But this is the footprints that we're looking for. This just helps us to figure out, is this a stock worth looking at? But this is the after picture, and we're dissecting it to try and find other opportunities that look similar. Thanks for your comment, Nick. Thanks, Anthony. Thanks everyone. Perfect. Great. So then the next part is, how do we scan for it? Because I made you a promise earlier. I don't want to flick through every chart every day all of the time. It's a waste of time. But if I'm going to scan, I'm looking for this footprint. So then I'm on to the same chart on the right, but this time now I've got a watch list on the left. As you know, for any of our regular viewers, I'm only looking at about 300 stocks. These are stocks that have options. They're liquid. They've got an average volume of 1 million shares. We've covered that in past workshops. So if I want to try and find a swing trade, I want to try and replicate this. Again, we're spending time looking at the past here. Okay, 2 months. So 2 months is about 40 trading days. When you take out the weekends, holidays, and all the rest of it, it's about 20 to 23 days, depending on how the week unfolds, or how the month or all the holidays, depending on when you decide to divide it down. But it's about 40 days is about 2 months. So that's what we're looking for. So I can look for these footprints. I also want to look at where price is relative to the 200 period and relative to the 50 period moving average. That's what I want to do. So what these indicators do on the left, I've got this column here, the white column now in the background. That's showing me all the average prices. So this is telling me the phase of the trend right there, the phase of the trend. That's what those two columns are. So the phase is when the 50 is above the 200. So that's what it's showing me. So if it's bullish, it's saying we've got a bullish average price crossover. If it's bearish, we've got a bearish average price crossover. And the column that's highlighted is the days in trend. And we've already established, okay, well, one of the footprints, or the footprint that we're trying to identify, is about 40 days. About 40 days is, okay, the average prices are probably moving. And to help us avoid a false signal, we also want to look at, is this stock actually moving up? Because it can be going sideways and we can have a false signal. To avoid a false signal, I can look at the column on the right, then it's now highlighted in white, to try and figure out, okay, well, not only do I want to see the average price crosses having crossed bullish or bearish for about 40 days, I also want to see if there is 20, 25, 30%. I want to know, is the stock moving? Great. So that's what I'm going to look at next. So I've sorted the stocks by the days in trend, and 40 days is about there. So I can ignore all those. Ignore. I want to know that the stock's moving. If the stock's going to trend, as we've seen on Twitter, we don't need to worry about getting in at the first possible, the earliest possible time. Let's wait for it to start moving. Then let's join the party. Imagine if we were out clubbing, if we could ever get out of the house at the moment. Let's imagine that we can go to a party somewhere. Do we want to go to the new guy, the new party, the new place? It might be a horrible atmosphere. The food might be awful. You know, the type of people that go there may not be your type of people. So maybe you want to go to the party that's got the best music, it's got food you like, it's got people that you like. Maybe we go to that party instead. That's what we're doing here. We don't want to go to the party that we don't know is a good party. So this is the footprints that I don't know where the metaphor came from, but you get the idea. That's what we're looking for there. We're looking for the best party. And it's still no guarantee that it's going to be a good party. But we've got the footprints, the chance of success of it being a good party is in our favor. So I'm going to look for stocks that have been in a trend for about 40 days. So we can ignore everything above there. Then I'm going to look at this right column that's highlighted in white. I'm going to look to see if it's got a positive number or a negative number. I'm going to look for, well, Twitter did about 30%. So maybe I look for anything that's above 20%, just as a kind of like, see what's available. Because again, I don't need to look at every chart. I'm just looking for one or two charts. And as we go, again, we've got the numbers, everything above 40 days is below that horizontal line. And, you know, the first one there is down 12%. The next one is, it's up 53%. So, all right, it's more than 20%, or it's more than 25%. You know, it's more than Twitter's 28%. So it's going up is the point. It's moving. So the average prices have crossed. Again, we're not looking at Hess yet. I'm just comparing what I'm seeing here on the watch list using tools, just an indicator version in a watch list version of the indicators to help me figure out, okay, well, what's available? So I've got Hess, row number 23. Let's take a look at it. So row number 23, HES. We've got 37 days in trend. Great. So we've got the trend, number one, check. Number two, we're in trend for several days, 2 months. We're up more than, 20%. Number three, check. So it's looking very similar to Twitter so far, isn't it? Looking very similar to Twitter. 1, 2, 3. Average price crossed over. We're up X number of percent at least. It's moving, it's going up. So we're expecting to see something similar that we're marking on Twitter. We're expecting to see that or something similar on HES. That's what we're expecting to see. That's the footprints. Does that make sense? So I'm just trying to do all the heavy lifting over here in the watch list so that this means that I don't have to look at every chart every day. Perfect. Everyone's like, yes, we get it, Phil. Yes, we get it. Please move on. Right. So then the next thing is, okay, well, if we've got the rally, we've got the time, we've got the average price, everything's looking great. So then the yellow box is saying it needs to be retracements. So it needs to be down X number of percentages, X number of percentage points. Now I've got two columns here. I can do this a few different ways. Column number 1 is showing me the last 10 days. And then column number 2 is showing me the last 3 days. So I can do it a few different ways. These next columns, they're just showing me where is price in relation to the average price. So I can see that, again, coming back to HES, which is there. I can see that we're bullish, we're going up. We've been in a trend for 37 days. The current price is above the 200 period. That's what that column is showing me. The next column is showing me, I'm going from right to left. The next column is saying, okay, it's above the 50, but then this one's red. It's telling me that price is below the 20. So everything's trending up. And if we look at the sell-off, so we've not quite got the 10% down in 10 days, because this is quite literally from today, and this is the first, and we'll see that in a moment. But we are down 4% in the last 3 days. Okay, so it's just helping me find a little something. So it's not quite 10% in 10 days. Again, we can look at the exact retracements, but it's looking similar. So what we're saying here is that price is retraced. It's above the 200, it's above the 50, but it's below the 20. That's what price was doing right here on Twitter. So again, I can look for a percentage retracement, or I can just look to see if it's below the 20-period moving average in the context of an uptrend. So that's what that row is showing me. Let me pause there. Does everyone get that? Does everyone understand the concept of what we're doing? We're comparing Twitter, the footprint on Twitter, this area of Twitter here. We're comparing that and what we're seeing, all the reference points, the footprints. We're looking at all of that on that row, that line there. That's what we're looking at. And I'll just pause there because I can see a few people typing away. So that's what we're looking at. That's what we're trying to compare. The same information. So so we're expecting to see that, and we're evaluating it over here on the left. Thanks for your comments, folks. So now so that's step number 1. Remember, step number 1, mechanical scan. That's all we've done. We've just done our mechanical scan. So mechanical scan. Step number 2, visual confirmation. Let's go and do it. So now this is the point where we would go and click on HES, and then we can look at the chart. Again, remember, we've not looked at the chart yet. We're just comparing it to Twitter. Now we can look at the chart. So we're expecting to see something like Twitter. Let me go back. We're expecting to see that area of the chart on Twitter, something like that. And that's what we see. Now, it's not always going to be the case. It just happens to be that the first one that we look at, again, this is all from earlier today, the first one that we look at, it's up 50. It's in a bullish state. It's been in a bullish state for about 40 days, bull below the 20. It's retracing in an uptrend. Great. It just happens to be the first one we looked at. So I've not cherry picked it. This is from earlier today. So we're comparing it with Twitter, and now we're expecting to see something similar. So now let's go through our checklist. Number 1, the average prices are crossed up. Cool. We've got about 2 months, 40 days. Well, it's 37. It's close enough. So number 2, we've got enough time in trend. Great. We want to see, is it actually moving? Well, it's up 44%. Our little tool, our widget said in the last 90 days, that's what this column is measuring, in the last 90 days. I'm just measuring it from the average price crossover here. So numbers are a little bit different. It's probably looking at the low there. We can see we're up enough percentages. It's going up. It's actually moving. Now, because this is a few days fast forwarded, it actually did 18% in 10 days. It did that move. It's already started to move higher. So that's great. It's now moving back above the 20. And we've got this lovely little pullback. This is actually one of the patterns that we look for on intraday charts. It's that retracement. It's a deep retracement. In this case, it's come back to the 50. It's kicked off the 50. All my insiders will be noting the wording that I'm using. You've heard this before. We've got a little rest, a little pause. So it's kicked back off the chart. It's resting. There's a good chance that the trend is about to resume. Would everyone kind of assume that the trend is about to start? It's about to resume. And that little pause, that gives me a possible entry above the pullback high. So step number 3, let's look for an entry. Look, trade the next pullback. Great. Trade the next pullback. So that's what we're looking at. Now, it's already happened. Just happened to land a go. You had the retracement. Several days later, it rallies. Trade the next pullback. There's the pause. Entry above the pullback high. Gives you a low risk because your stop loss is going to go below the pullback. Low risk entry opportunity into what could be a good swing trade. Because what we're expecting to happen next is that. That's what we're expecting to happen next. Boff. We're expecting to see a trend next. Does that make sense? Is everyone happy with that? Any questions about this so far? This is just the theory. We're going to go and do it in just a second. But this is all from today's trading. It's not a cherry pick session. You'll see it in just a second. But does everyone get it? Any questions at this stage? This is what we're looking for. This is how we're going to find it. We're now going to do it for realsies on the chart platform. But that's the theory. Does everyone get it? And is there any questions? Zach, lovely, beautiful. Yeah, it's nice. It's simple. But it comes back to, cheers, Rodrigo. Thanks very much. It comes back to, like, what are we looking for? I'm looking for a certain thing. I like the fact that Twitter's done that. It's done it several times. And this is what trading the trend looks like. So this is the before image. This is the after. This is what we're looking for. And again, there might be multiple times that we can trade. So right now, if we're looking at Twitter, in fact, let's go and do this let's go and do it on the big charts. Here's one I prepared earlier. So right now, do we want to be a buyer on Twitter? Do we want to be a buyer on Twitter right now? Again, this is Twitter. TWTR. Do we want to be a buyer? It may go higher. It may go higher. I can't say that it won't. No one can ever say for certain what's going to happen next. But if I'm looking for a brand new trade right now, we don't really want to be buying the rally. Let's wait for our entry points. Now, if it came back to the 50-period moving average, that'd be awesome. Now, it might be a little bit of time goes by before it gets there. But if I'm looking at a 10% move, at least in 10 days, and this retracement last time, that was basically Donald Trump was kicked off Twitter. Trump off Twitter was what happened there. So it was a BS piece of news, first of all, but that created a buying opportunity. It was literally nonsense news, but that's what everyone attributes that move down on Twitter. The reason for it. It took a few days. It started to move high. As you may recall from past workshops, we said, going to be bullish above $50. That's what I'm waiting for. It went above $50. Guess what happened next? Now, it may move high. We can't say that it won't carry on moving, but I don't really want to get involved right this second. Not for a swing trade. It may be great for a day trade. It may provide some really short-term opportunities, but right now, probably not the best time. Wait for the retracement, buy the dip. And if it comes back to this gap, maybe it comes back to $60. If it comes back to this prior high, somewhere between 60 and 50, that would be great. If it got there, that'd be awesome. If it doesn't, no big deal, because I can use the moving averages as my benchmark. But if it got there, that's where I'm trying to think, okay, well, what needs to happen next? A period of time, a retracement, a depth of retracement needs to happen next for me to be thinking, okay, this is a buying opportunity on Twitter. It's going to be at least 20%. And in fairness, 16, 26, down 19. And this is the footprint that most newer swing traders have difficulty doing. We want to buy the dip. You're buying at a discount. If you're Warren Buffett, you'll be phrasing it like, I'm investing in this company at a discount. What does a discount look like? We've just defined what a discount looks like. That's what it looks like. Buy the dip. We're not looking at every dip. We're looking at the big dippers. Great. Because the trend arguably hasn't changed. So that's what we're looking for. So let's go and put it into practice. So I've got my fancy tools over here on my watch list. And all my colors are a little bit wonky. I wonder why they're wonky. You know what? Let's work through it. They should be colored. Again, this is the downside to getting something custom coded. Occasionally, it just throws a spanner in the works. We don't necessarily need it. It does clearly say it's bullish or bearish. Anyway, we've got our days in trade, days in trend there. That's what we're looking for. So let's sort that column. That's what we did on the watch list. So I'm going to scroll down this time, and I'm just going to put all the stocks that are about 37 days. So the top one there is about 37 days. So about that 2 months, about that 40 days. Now the trend's going to have probably been in effect before then, but this is just when the average price is crossed over. So then the next thing I'm going to do is I'm going to look down in the last 90 days, is this stock up or down? So we've got days in trend. I've got the direction of the trend there. That's still colored in the right way. So if I'm looking for a bullish trade and I want to buy the dip, I'm looking for a nice rally over the last several months. And again, we've already looked at Hess there. We've already looked at that one. So what I can do is I can look at the next one, Citigroup. Citigroup is also in a bullish state. It's been bullish for 41 days. It's been up about 44% in the last 90 days. Now, what we don't have really, again, the colors, unfortunately, they're just not showing, but we've got bull, bull, bull. We don't quite have the retracements. Now, because this is the first time that you're seeing this and looking at this, and the first time that you may do this for yourself, you might just want to go look at it anyway, because it could be like Twitter, it could be starting to. Now, when you're doing this every day, you will have spotted that, okay, it's done 10% down in 10 days. It's below the 20, it's below the 50, in fact, but it's still above, we've got the usual benchmark. But Citigroup's looking awesome. There's that same pattern. There's the rally. There's the retracement. It's kicking back off this approximate zone, looking left. We can validate, oh, that's where it started. That's where it stopped previously. So this looks like a great level. It's kicked back. Trade the next pullback. Where could it get to? I'm going to look at the retest of the recent high. So about $70 looks good. Does this look like Twitter? We've got the end result in mind. Twitter. That's the end result in mind. Does it look like our picture perfect example? Give me a little yes in the chat box. Let me know we're all on the same page. Cool. Emily, love it. Zach, perfect. Rajesh, great. It looks similar. Great. Let's go back to our slides. Step number 1, mechanical scan. Step number 2, visual confirmation. Step number 3, trade the next pullback. It's done that. Put the trade on, wait for it to do what you think it's going to do. Go up. Great. So production line complete. Entry above the pullback. Pullback is just there. We can see it rallies. It's kicked back off the retracement low there. It's paused. There's the pullback. Entry above the pullback, stops below the lows. Target, initially I'm going to look for a retest of the recent high. Cool. This is a brand new early stage trend. Should we see if we can find something that looks like... So that's that part of the chart. 2 months. That's that part of the chart. There we go there. There we go. So that's that part of the chart. That's what we've just found. That's Citigroup. We found Citigroup. We found HES. Cool. They're the traits. So there's 2 that we found. Very good. See how quick and easy it was to find that. It takes longer to explain than to actually do. But we need the end result in mind. Should we see if we can find something a little bit more established? Should we see if we can find that footprint? Because again, we've got the next leg. Let's break it down into 3. So we've just found number 1 trades. Number 2 would be the second push. and number 3 would be the third product. Let's see if we can find trades with number 3s. So just looking backwards at 1, 2, 3, 4, 5, 6, 7 months. So we're looking for a 7-month trade, 7-month in trend. That's about 120 days. 120, 140, somewhere around there. About 20 days in a trading month, not calendar month. And all I've done is I've counted the squares. All these squares represent 1 month. So all I've done is count backwards. 1, 2, 3, 4, 5, 6, 7. Well, that's 7, 8 months. Cool. So we're looking for about 120, 140 days minimum. That's going to give me box number 3. I'm looking for it to be more than 40, 50, 60%. So I'm looking for about 64%. And I'm looking for a 20% retracement. Minimum of 10%. But yeah, but it seems like this stock does at least 20%. But our example, so let's see if we can find step number 3 or box number 3. Let's see if we can find that type of trade. So we're looking for 120 days. We're looking for the usual conditions, down 10% in 10 days. The more, the better. It needs to be above the 200. Maybe it's above the 50, but it could be below. That's fine as well. But it definitely needs to be below the 20. So that's what we're looking for. Let's see if we can go and find it. I'm looking for a little bit of a longer trend. So this time we're going to scroll down. I'm going to, on this column here, the one that's white background, I'm just going to scroll down. I'm looking for about 100 days. There we go. Here's all the 100+ days. Now I'm going to look down this next column. It's 50, 60% up. In fairness, because of everything that's going on, most of them are going up. But what I want to do is I want to find something that looks like it's right now. So I'm going to go over to this column. Now, this column is just looking back at the percentage change in 10 days. So I can look at, zoom in straight away. DD. Let's look at. So let me just mark off. So below that white line is DD. It's DD. It's in a bullish state for about 130 days. It's up about 30% almost. We've got bullish. It's above the 200, below the 50, below the 20, and it's down 12.5% in the last 10 days. That is my dip in an uptrend. Now, looking down, just at these, we can see about 50 stocks here. I don't see, do you see any other stocks that are down 10% in 10 days? Can you see? I only see one. Everything's, there's one up 10, up 20, but they're in a bullish trend, so we can ignore them. Just looking down the list, there's only one, maybe First Solar. It's down 5% in 10 days. So there's maybe 2 stocks for me to look at. Did you see how quick that was? I'm looking for that kind of like, looks like Twitter. It's in that kind of later stage of a trend. There's maybe 2 stocks for me to look at. Let's go and see. So we've got the, where's my, there it is. So we've got the mechanical scan. I'm looking for, we've scanned for that part of the trend. Number 3, as we labeled it. And now I'm looking at, visually confirm it. I've got 2 stocks to look at. Let's go and visually confirm that we're expecting to see what we see. We've mechanically scanned. So clicking on DD now. Let's do visual confirmation. Do we have it? There we go. Beautiful. Average prices crossed over a long time ago. 130 days to be exact, because we already knew that before we looked at the charts. 130 days. Cool. We've got price going up. It's going up. Great. It's up about 29% in the last 90 days. Does it all for me? Great. It's going up. It's retracing in the last 10 days. It's down 12%, and it may continue to go more. It's not over yet. So what we want to see is we want to see it kick back and pause, like it did here. You know, just pause, rest, retrace, however you want to phrase it, like Citigroup that we just looked at, and then rest. So it's not today, but let's put this on a watch list. Let's see if it happens to set up a trade for me next week. Now, Citigroup is a good example of, yeah, it's got everything. There's no reason for me not to put the trade on. That's what we're looking for. So that's the trade, the next pullback. It needs to kick back. It's done that. That's what we're waiting for to happen on DD. It's not happened yet. Does everyone see how easy that was to find something to keep an eye on? So that's my watch list. I'm going to keep an eye on DD for the next couple of days, maybe a week, maybe 10 days, maybe 2 weeks. Maybe it never sets up. We'll find out. First Solar, let's check out there. So First Solar is a little bit different. First Solar's been visual confirmation. We've got all the mechanical reasons. It's clearly got in a consolidation here. So I've got less reliance on the moving averages. So what I'd like to see here, because visually now I'm inspecting it in the last 2 months, it's in a consolidation. It's not retracing. So I'd want to see a breakout to a new high. That's what I'd want to see here. So a little bit different. We've covered the 6 trend phases. So 6 trends we've covered in, I think it was 2 weeks ago in a prior workshop. That's how come I know what to do here. This is what the visual confirmation. So DD is meeting our requirements. It's in the retracement mode, and we're waiting for it to look like Citigroup. That's what we're waiting for it to look like. It's put in the retracement, and we're looking for it to start moving. Does that make sense? Everyone happy with that? Everyone happy with that? Big question time. Big question. Do you think that you could replicate that? Could you replicate that process? Now you know how to do it. Could you replicate it? That's my job here today. Can you replicate it? It's mechanical. Awesome. Yeah, absolutely, Emily. You may need to watch it back. I appreciate it. Don't worry about taking notes. It's been recorded. But we've got the footprints. We know what we're looking for. Assuming that you've got the checklist, step number 1, average price is going up. Check. Step number 2, enough time has gone by, about 40 days. Great. Step number 3, it's actually going up as a percentage, 20+%. 20+%. So step number 3, it's going up. Cool. Wait for a 10% retracement. So step number 4, it needs to have retraced down 10% in 10 days. There we go. There's your production line right there. That's what we're looking for. So hopefully that just helps solidify the rule set. And then step number 5, trade the next pullback. PB. Wait for it to push, trade the next pullback. There we go. I'll timestamp it, but it'll be recorded. It'll be there for you. As you know, I like to help traders. If you've got everything you need, you can go and replicate this tomorrow, later today, whenever you decide to do it. If you need more help, I do help people with both swing trading and day trading. So if you want to know how to do the day trading and all the other things that go along with it, you've got just one of the scans that we use for day trading. We can profit from swing trading stocks. If you'd like some help with the day trading side, we can use the day trade version of pretty much the same strategy, whichever you prefer. You can choose your own adventure. Very simply, just go to the website AntiVestor.com. You can choose your own path. If you need more help with what is a chart, you can go to the I Need Basics help. If you want to learn the day trade strategy, go and look at the day trade strategy. If you want help with the swing trading strategy, then choose the swing trading strategy. If you'd like mentorship, my private one-on-one coaching, just send me an email. I don't know if what I do is right for you. But let's start the conversation. Send me an email, phil@antivestor.com. Let's have a chat. Let's have a conversation. And if I can, at the very least, point you off in the right direction, that makes perfect sense. But again, if you would like some extra help, then let me know. My promise to everyone is, if I could help you find short-term explosive stock movements, and if you want to learn in the smartest possible way, and focus on what is essentially one simple pattern, trade the trend. We have a fully functional management system, so that the process after we're in the trade is fully documented. We've got the TTE management process. We've got timeout, target out, exit times. We've got 3 basic rules. We've also got a production line for that. And as you've already seen, you're never going to stress over which way the markets are going tomorrow, whether they're going up or down. The strategy works, or the scan works. You'll never be flicking through chart after chart after chart. This takes longer to explain than to actually do, and you'll never be reading through boring company reports. But what I will promise everyone is that it will help you build trade confidence. And again, you don't have to take my word for it. We started off the session looking back at, a lot of the student successes. This is the day trade version of the strategy, but I can quite literally take you back through every trade I've placed, for the last 12 months I've got on this slide deck. This isn't an isolated instance. I call all my trades out. There's lots of student wins. So if you want to replicate this for yourself, you can certainly do that. It is a repeatable production line process. And again, as I said earlier, I don't accidentally call it a production line. It's called a production line for a reason, because you should be able to replicate it. But anyway, if you need more help, if you'd like some more assistance, by all means, let's start the conversation. phil@antivestor.com, and we'll see if what I do is right for you. Whether you're day trading, profits at the open, or you're swing trading, you can create wealth without worrying. That's my shameless pitch and presentation, folks. Thank you very much for your time, your attention. The main focus of today's session was to find stocks to swing trade and to profit from those explosive candidates. We use Twitter as our benchmark, our footprints for what success in a stock might look like. And we looked at how to replicate the Twitter trend and go and look for it in other stocks. The candidate that I really like the look of was Citigroup. Citigroup's a great, this is what it looks like before you place the trade, and Twitter's a good example of what it looks like with several trading opportunities. So I really hope you had a great time today. I really enjoyed the session. I think it was one of my better ones, but just really how to find stocks to swing trade. And not only that, to actually potentially find explosive movements in those swing trades. So that's it. Thank you very much for your time. Thank you very much for your attention. I really appreciate you taking a moment out of your day to spend it with me. So it's not unnoticed. With that said, I'm going to go and see if there's a few trades for me to place. If you've got any questions or comments, feel free to send them over to me. Or if you're watching this on the replay, just pop them in the YouTube comments below, and I'll get to them as soon as I see them. For the moment then, thank you all for your time. Have a great Friday. Enjoy your weekend.